Hi, everyone. Everyone doing okay? Hope everyone had a good weekend. Jeff, Shahab, Kevin, Didier, Brock, Alexander, everyone. Okay, so this is what the dollar needed to do to generate another high in the S&Ps. So when I go back and I look at the 2-hour down here, this always bothered me. This confirmed low. Okay, so I think we're going to take it out and head towards these levels here. Between 92.80, 92.37. It's still my contention we're not just going to blow to new lows here. I know a lot of Ellioticians are thinking that could happen, and they could be right. I'm still thinking that there's a higher low coming in, and that there's potential for the dollar still to rally back towards 95.78. I'm not a deflationist on this move, but I think, once we get down here, we could grind out a low for one more push up. Everyone with me? I talked about it last week when I was shorting the pound in my narrative for a pullback in the stock market into Thanksgiving, along with a dollar rally, along with where the pound would be the preferred short, and pound trade worked, but now we're going to head back to what I thought was going to be a potential target. I think that we could get up towards 31.70 now in the pound. As long as we're holding this 29.70, it looks pretty good. And there's now a way to come up with 3,600 in S&Ps. If you just look at this recent formation that we have here, okay, from here at 34, call it 40 to 516 is 76. So 76 over that's going to take you to 35.90. Kind of a little ascending triangle if you see it here. If we start closing here, I have 0 on right now. The VIXI did confirm down here, right here. So I'm looking for a new low, but I'm still giving this formation, okay, a falling wedge. See this on the daily? Okay, we haven't negated the breakout. And the wedge, if it is a wedge, can correct 100% of its decline. I have it anchored here at about 97.80. So it may not get up that far, but I'm looking for 95.50. So why do I think it's going to hold? Because I still think this is the active formation until we negate it. And in fact, I could recall a situation after the COVID crash. Let me move you guys around. So it's back here in the S&Ps, and we had a falling wedge. Okay. Right. And we broke out over 2340. I do remember it because I made the call here. And then people were saying, back then I go, well, we could get at least a retrace, right? I certainly wasn't looking for new highs. But when I talked about where I had the wedge anchored at 3,100, most people thought I needed to be stabilized. So I believe in wedge patterns until they're negated. They're not negated until they either, take out the wedge line or make new lows. So this is a classic example of a wedge where, people were negative even after the breakout, but, where I had it anchored, it manifested and surpassed. So I'm basically looking for the same type of action, not as aggressive, but still think that the dollar correction up here, I think this is going to be the short of the decade if we fail from up there. So That's my take on the dollar. And what's interesting with all this dollar weakness, something I'm paying attention to, the end's not getting hammered, right? In fact, look how far the yen is off the low of the move that we made in late September around the equinox. So I'm not saying we can't take out the 490 low, but the yen is showing relative strength during periods of dollar weakness. Maybe we just need to take out 490 and trade 478. But even if the dollar goes to 92.60, I don't think we're going to take out the 104 lows. Okay, so you know, when the Dixie's around 92.60, I'll actually, if you know, as I'm talking like it's you know, foregone conclusion. If we get down there, I'll be interested in where U.S. dollar yen is, because there are a lot of people right now. I think 70% bullish yen. That means looking for a decline. So there are a lot of people bullish on this, and you know, we're so far away from 104. So that's my view coming in today. One last thing I want to show in the metals is this in silver. This little formation right here shows up better on a 2. Kind of look like a little head and shoulders formation here. 2350 to 450 will give you 550. So maybe we finally get the rally up to, you know, 26, 20. I'm a seller up here, and gold, maybe we get a move up towards 1940. I'm thinking we could have a quality from this wave starting here, which could take us to 1940, 45. And the S&P is the new high. Buy the world, except the dollar. Okay, so it's a big day for ForexAnalytix. I want to wish my teammate Leandro a lot of luck with his Spanish webinars. If you guys know people that, you know, that's their main language. Leandro is an excellent market guy, technician. So you could be on the lookout for that. I think it was okay for me to talk about that, right, Blake?
Absolutely. Sorry,
Okay.
just looking for the looking for the mute button.
Okay. Blake.
Yeah. I mean, today is a big day for ForexAnalytix. We're launching a Spanish webinar. So if you speak Spanish, you should go. It's Leandro has been he's a trader that I've known for. I want to say he's one of the first people, probably with one of the first 30 people I followed on Twitter over 10 years ago. He's always been a gentleman, great analysis. I've always appreciated his views, and we're very fortunate to have him part of the team. And he's going to be, you know, promoting ForexAnalytix in a Spanish form. We have a Spanish version of ForexAnalytix that will be released in the next, I would say next week to 2 weeks. And it's really cool. We've been working on that for a while. We're and you know, we hope that you guys will join in, and you know, those of you that are Spanish speaking, you know, so for another view of the market. So it's going to be a free webinar twice a week, and it's pretty cool.
Congratulations.
Well, don't congratulate me. It's congratulate to the team, and you know, to also to the people that are, you know, that this is going to really benefit. I'm hopeful that so one of the hold on, why are we getting a little bit of volatility here? Hold on really quick. Barnier and UK Frost are speaking. UK will not continue Brexit talk. Whoa. Wait, hold on. UK will not continue Brexit talks after year end. Oh. Wow. That's a big statement.
That's
That is a
exactly
big,
what it is.
yeah, that's a big statement,
Depends on
after
read. Is either going to be a deal or not still, right?
Amira Cohen
Right.
wants to know when we'll do webinars in Hebrew. Here's one for you. Oy vey, they took out my stop. There's your Hebrew webinar.
We're going to give you a Hebrew webinar. That's
Oy,
great.
oy, got to know. Oy vey is mir.
So, and by the way, Pal is actually speaking right now too. He's evaluating benefits of a digital currency. Whoa.
I know.
Whoa.
The
I
Great
wonder if,
Reset.
maybe Bitcoin gets a little lift on that. Woo, woo, woo.
The
You never
question
know here.
is this actually Bitcoin positive or
I was going to
Bitcoin
say
negative?
that.
Yeah.
Yeah,
I don't know.
They'll
because
have their own.
He's supposed to be talking on digital currencies.
I
So.
can see both sides of the argument because I mean, knowing how monetary policy and governments work, my assumption here is what they want to eventually make is make, you know,
Their own.
it's centralized digital currencies and then ban everything else.
Yeah.
Those
Yeah. I mean,
bastards.
it's possible.
Or
Sorry.
regulate them so heavily and make it so
Draconian.
burdening,
Yeah.
to actually transact in them that nobody would want to do it.
Yeah, it's quite possible. I mean, it hasn't affected Bitcoin too much, but Pal is speaking. Oh, hold on real quick. We'll be approaching this question with great care. Whoops. Pal has not made a decision to issue a digital currency. Okay, well, hey, the good news is about Pal. Unless he gets some Q&A this morning, he's not making any monetary policy remarks yet. So we'll see. But is it going to continue to influence Bitcoin? And I would only watch Bitcoin. I mean, we've bounced a little bit, but you can see there's a little bit of volatility going into the event for cryptos. So, well, good morning, guys. I
Good
heard
morning, Blake.
Steve and
Yeah.
Stelios, and
Good morning,
obviously
everybody.
Coach, and yeah, we have our Spanish webinar that'll be broadcasting. It's going to be broadcasting here in the next couple hours. So excited about that. We have today, well, I guess this week, I was hoping we get some more information on a UK EU deal, and that's probably one of the reasons why the euro is so strong and the cable is so strong today. It looks like that the UK wants to rewrite Johnson's Brexit bill, and that's what has pushed up the euro and the pound, and but the pound's given back some of its gains this morning, and I'm not 100% sure why, other than there's the talks that were going to be happening today, and maybe you got some people pulling some profits off the table. But I was really hoping that we might get some more definitive news on Brexit this week. And we really have, I think Pelosi put in a self-imposed deadline of like
48 hours.
48 hours. So we basically have another day.
She saw the movie with Nolte and Eddie Murphy. 48 hours.
48 hours.
Great movie.
You're like, yeah.
So hopefully we have some sort of decision here about what we're going to do with stimulus. Now remember, we're going to get with a blue wave if Biden is elected and we get Democrats taking both House and Senate, which that's not likely as it is, and then I still think that the election is very, very much up in the air. So but that in itself, when it comes to election day, or the week or two after that, that's when you start looking at it doesn't matter, stimulus is coming regardless if there's going to be Democrats running the show. They're just going to spend like it's nobody's business, and that's going to stimulate the economy and stocks, and put liquidity out there, all that. But right now, the market is assuming there's some stimulus, but if we do not get any stimulus package passed ahead of the election, we might see a little bit of a pullback. But as I said during the week ahead video, there's no reason to be bearish right now. We dipped below the 38% retracement here around 34.20. And you can, start to get a little nervous about equities. And matter of fact, I'm going to write that down this morning on our bias chart. But before I get into the bias chart, Steve Stelios, Coach, did you have any comments about what we're looking for this week? Because then I'm going to take over and start doing some charts here. So go ahead.
I was going to say it's a bit of the same. Same. We have the two main fronts, the UK and the US stimulus bill, and the UK I think is a little bit more pressing, but it's the same thing that we said on Friday and Thursday and Wednesday, and nothing new from my side, unfortunately.
I think Grega and Steve Volge are going to be right about a new high in the S&Ps.
I mean, it looks like it.
I think it's likely. Yeah.
It looks like it.
The weak dollar could be the jet fuel for it.
Yeah, I mean, look at gold. I mean, gold's pushing higher right now. You can see
everything. Lower dollar, higher everything else. Higher dollar, lower everything else.
Yeah,
that way, you know what I mean?
So, Steve, do you have any thoughts before I get into the charts here?
He always does.
Yeah, you get blue wave, you sell the dollar, and just keep looking at it.
Right.
I think we're going to see deficits that we've never seen before
since the Roman Empire.
Yeah.
Yeah.
The flip side of that is if Trump does the unthinkable and he wins, you're going to see the exact opposite of that, and so that's something you got to keep in mind too. I think equities would come under pressure, dollar would strengthen. So don't think it's just one direction, guys. It could definitely be the other direction as well. And I am a firm believer that this race is much tighter than people believe. So
and it's going to be contested, Blake. So that could last. How long did Gore and Bush the contested election? How long did it go after election day till it got to the Supreme Court?
I can't remember.
I think
Dale?
a couple of months, I think into January. The hanging Chad, remember?
Yeah,
So
but I can't remember. Somebody else will probably be able to chime in here and give us some. But anyway,
like that.
Let's get into the charts though, because I want to get this done so I can let Steve and let Steve and Stelios comment about the markets here. So you can see the euro dollar has rallied quite substantially. We were looking at the euro, and you can see this is from Friday as we broke through this trend line here, and we warned that a breakthrough this trend line, this is on Friday, above this 117.30 level would produce some upside, and here we are, right now. Whoops, got to go the other direction. There you go. Now we're rallying into pretty key resistance. So the euro should find some really good resistance at 118, and you can see all this.
One of our attendees said it took 1 month to decide that between. You're right. We have a very well-informed group of attendees.
Yeah. I mean, I can't sit here and do analysis in Google at the same time. It's like kind of like patting my head and rubbing my tummy at the same time.
Yeah.
Difficult.
Yeah, I gave that up.
Yeah. So while you guys are seeing my charts, it's hard for me to like stop what I'm doing and like flip over to Google. And I'm glad that people out there can, run and, type something in and search it really quick. So, and fact check, right?
Yep.
So here's the euro coming right into 118. I think 118 is going to be resistance. Okay. We're going to be range bound pretty much on everything. Support today is going to be all the way back down towards 117.40, maybe even lower than that, maybe even back towards 117 and a quarter, but I'm going to write down 117.40 as support intraday. Okay. Below that, just in case things reverse for whatever reason, let's say, you know, some negative UK news comes out and, you know, the euro just kind of gets upended. You know, all this support down here is going to come right into play, coming down at 117. So I'll write that down. Okay, and if my nose sounds stuffy, it is because it's allergy season here. Full swing. I got up this morning and I'm itching my neck. Like, I know it's bad when I start like physically itching my neck. It's like it's allergy season, and which is good because that just means it's getting cooler here. Finally,
Yeah.
we're still 100 degrees over here, guys. And I'll tell you, for those of you that do not believe in climate change or you know, global warming, that come live where I live. This is like the hottest summer on record this year. We've broken every record, like the number of days over 100 degrees, the number of days over 110 degrees. We've broken every record this year. So
I can tell you, Blake, that in Greece that we have a very soft and Mediterranean climate. Since I was a kid, the climate has changed a lot. I mean, I can testify to that.
yeah, I mean, it has. I mean, when I moved here in the 70s, you know, admittedly there wasn't as many buildings, and I'm just writing these support and resistance levels right here for the cable. You know, there wasn't as much built. A lot, you know, we weren't in so much of an urban jungle, if you will.
A megalopolis.
Yeah, so I do believe that a lot of these, you know, you walk, like, I'll give you a great example. A couple of nights ago, I was walking on next to this freeway, and there's a sound wall, which the sound wall is a big cement wall that blocks the sound of the freeway to, you know, the neighborhoods. And we were at a park because this is where my son is practicing soccer, but the walking area, the path goes by this sound wall. And, you know, it's 6, 7 o'clock in the evening, and it's the sun's almost down, and you can feel the temperatures drop. You know, I'm in the desert, so the temperature dropped probably, you know, 10, 15 degrees, but I could feel the heat radiating off of the cement. I mean, and that's, you know, that's the thing. You know, you build all these human structures and they retain heat, and that's, you know, we're just between that and all the gases and everything else. I mean, it's like I walk next to the wall, and it's like I can feel how warm it is, you know. So anyway, it's just, but I've watched it really warm up here, and I think a lot of it is due to, you know, the urban jungle that's been created over the years. But anyway, that's neither here nor there. 130 and a quarter is going to be. I guess the point I was trying to make here is that it's hot, and it's still hot, but it's starting to cool off, and I'm pretty happy about that. All right, so here's the Aussie. We got to watch the Aussie really carefully. Oops, that's not what I want to do. Here's the Aussie, and oops, here, I want you guys to watch this. To be careful that we're not developing a flag. Now, the reason why I say that this is kind of important to keep an eye on, because we have really critical support below where we're at. So the support level, if you guys don't recall, is right here at 170. Well, it's 170.30, but I'm going to actually write down 170. Well, I want to write down both actually, but those are all really critical supports. But if we're flagging here, you know, the risk is, you know, if the Aussie actually breaks down, I mean, you think about where that goes, and that points to 69 and a quarter. So, you know, it's just, I'm not saying that we're going down there. I think it's becoming a risk if we start breaking down. And I played the Aussie on the long side last week when we were down here. I bought it. I didn't stick with it very long, but I mean, with stocks where they're at, I'm surprised we haven't got more of a response there. So anyway, today we're not so worried about that right now. It's just something I want you guys to keep in mind. So 70.80 is support. Intraday, that's going to be channel support, and below that we have 70.50. I mean, there's all sorts of support down here. Resistance, previous support, current resistance will be at 71.25 in case we make it there. Okay, New Zealand had their elections this weekend. You know, really a strong showing from the Labour Party. The Kiwi stronger, but as I explained in the week ahead video, you got to be careful of like the longer term negative implications of what that's going to mean for the New Zealand dollar. I figured today we'd be up a little bit, but you know, the RBNZ might have, it might be open season for them for negative rates. You think about where we were at just a few years ago, like 4 or 5 years ago, when, you know, New Zealand's rates were at 6-7%. Australia's, the RBA was, you know, around 6 to 8%, somewhere in that neighborhood. And, you know, we said several years ago that on our webinars that, hey, you know, we're living in a ZERP world. Everybody's going to go to zero interest rate policy. It's interesting. You start looking at countries like New Zealand that's going quite possibly into a negative NERP situation. So lots of change in the last several years with these countries. So New Zealand, you know, the Kiwi, obviously we have resistance all the way up here. I do think that this horizontal resistance is going to be a little bit more significant for today, which will come up around, let's just call it 66.60 in case we get there. Then 66.80, we are in a range. Support 65.80. Oops. Just going to get through this analysis really quick, guys. Do we have any data coming out this morning?
Nah,
Not really.
nothing really. I mean, wholesale trade from Canada, but you know, who cares?
Right.
Yeah.
Okay, thanks. So we just held this support right here. This is 31.65. Benedict in our chat room just bought the dollar Canadian at 31, I think 60. I think he paid 31.65 as well, right down here. So we just found some support. Resistance, I mean, we're not really moving here. So our resistance would be 32.10. So I'm gonna actually write down 31.50 as being support, because I do think we could drop a little further back down towards this neckline down here, which would be 31.50. But this might have been it today. 32.10. And then we are range bound. All right, next. Dollar max. Okay, so the dollar max continues to trade heavy. This broken trend line, you think about this broken trend line comes down right ahead of this support. So 2085 is going to be huge. And I'm going to put asterisks there. Huge support. Can't get excited about the dollar max until, I mean, we have to get above 21.25 and then definitely above 21.50. So got a lot of work to do, you know, to turn the dollar max back to the upper end of the range. Swissy got absolutely destroyed today. Swissy came off. You might argue here that we're on support right now. I'm not sure if that's very playable down here, but this support at 90.85 will be more important. Resistance 91.60. I think that's what we wrote down Friday, if I'm not mistaken. Lots of ranges still going on. Let's go to the US dollar Norwegian krona. Now, the US dollar Norwegian krona is holding up pretty well. And this is very similar to the Aussie. You know how I showed you that the Aussie is, you know, not really rallying. Well, the US dollar Norwegian krona isn't really selling off either. So I think we have to be very careful, especially if you're actually stepping in, trying to buy Norway right now. I'd be a little careful here. Today, support will probably be at 925 again. Resistance at 940. I'd be really careful shorting this one. 925, 940. We're gonna keep it on range, but I'm borderline throwing that back into a bullish stance again. Okay. Let's see, dollar index right down to 30.25 support. You guys should remember that from last week, right? 93.25 support. I said 90.25. 93.25 support. Solve our support from last week that we wrote down. The lows today has been 93.22. We're already bouncing a little bit. Could we come down a little further? Sure we can. I'm going to write down 93, 93.25. Resistance today, 93.50, which would be this previous support. That's intraday. So I do believe we are in a range. Okay, dollar yen. Here's the dollar yen. Once again, nothing happening. 105 to 106. There we go. That's it. You guys can have fun with that one. Now, whoops, 106, not 106.50, 106. Gold, real simple in gold too. You guys saw it earlier if you were looking. There's our triangle. 1920, 1895. Breakout's coming, guys. It's coming. It may come today, but let's see. 1895. All right, your bias chart is done. That's easy.
Nice,
right?
buddy. Yep.
Well, I mean, it's not nice. Who we kidding? This sucks. We need to make this all like bullish across the board, right? Like this. Yeah, now we're talking. No, but that's not really what's happening right now. So unfortunately, that's what we got, Dale. I know. Things will develop, and they're probably going to be developing here in the next couple of days. So just, or, in the next few days. So just, you guys have to be patient. These are the times where you have to trade small. Don't take on a lot of risk. Don't, it's okay to be wrong. Just don't stay wrong.
Love that.
Right. Yeah.
Was that Ziggy's statement or yours? Ziggy.
No, that's something that I've always said.
So he got that from you. All right.
Yeah. You just don't, you can be wrong. I mean, we're always
everyone's wrong
as traders, but you just don't stay wrong, especially in this environment, because it doesn't give you enough opportunity to be right. Really right. You know what I mean?
Yeah.
Not yet. It will, but at some point we're going to see explosive moves where you're going to be like, man, I crushed the euro, whatever direction it ends up going. But, if you spend the next 3 weeks, being wrong too much and too aggressively, that one big gain that you have, it'll eat into all those losses, and then you end up not going anywhere. And then, that sucks. Right. So just, trade small, don't stay wrong. It's okay to be wrong, and that's it. We're gonna find some good moves developing here soon, I'm sure. So be patient for them. All right.
Yep.
So
in the
good morning,
meantime,
gents.
go to the golfing range.
Yeah, you can do that too if you play golf. Steve, Stelios, how you guys doing?
Hello,
Hey,
hello.
Blake.
Very
Hey.
good.
So.
Well, we went to the beach on Sunday, so I'm not complaining.
No, you're not
This
complaining.
guy.
You were actually rubbing it in.
This guy.
No.
Hey,
Why
it's
do we
still-
bring him in?
Just
It's
rubbing
still
it
warm. It's still warm, man.
I know
Yeah.
it's actually it's still cooking over here too. So, but I'm looking forward to some cooler weather and ranges breaking. So let's
Yeah.
hope for that. And I'm going to pass it over to the two of you guys. And wait, before I do, I have to mention, guys. Okay, I know a lot of you. I know a lot of you are you are ForexAnalytix subscribers, but for $1, try it out. And if you want to try to get it for free, go to the Forex sponsor page, open up a Pepperstone account, or transfer over some of your cash to a Pepperstone account, and then you can get ForexAnalytix for free for a period of time based on your trading. So come join us. Be a part of our community. Right, Dale?
Yeah, trade with us so that you have a Merry Christmas.
There you go. All right, guys. I'm gonna leave it at that. You guys have a great one. I'll talk to you soon, and I'll see those of you that are ForexAnalytix subscribers. I'll see you on the daily roundup in 4 hours.
Thank you, Blake.
Have a good one, buddy.
You too.
All right, so let's play the tape from Friday, shall we? No, I mean, to be honest, we do have a couple of little things that were said, so probably worth mentioning. Let's start with the UK. Blake did mention there were a few comments from the UK spokesman where they may be ready to rewrite the bill that created the big problem a few weeks ago. So that shows a little bit of
Good faith.
potential, good faith. But then they say that they're not going to continue Brexit talks after year end because really there's no point, right? They're saying that prolonging the talks will not bring any certainty, and they kind of have a point on that because they've been going on for years.
Indeed.
And there's
if they kick the can down the road, I think we'll just get to the next deadline and we're going to be at the same position.
Yeah. So, we wait to see today's phone call between Barnier and Frost, I think. But, we're at the last days where really something has to be done. Now, on the US side, I was actually having a conversation with a friend of mine. I met a friend of mine from London. He was a market maker as well. Then he became the treasurer of a very big bank in London. So a very senior guy, knows what he's doing. And I saw him on the gym this morning by accident. And we're talking, and he said, what do you think about the US elections? And I said, look, it's going to be really close, no matter what polls say. And he said, yes, I agree. And then I said, the problem that we're going to have is that the majority of Trump supporters are going to be voting in person. And I think there was a poll and they said like 50% of Biden supporters are going to be voting by mail. So the most probable thing is that when they first start counting the votes, Trump might be in the lead. And then as the mail-in votes get counted, Biden starts clawing it back and going into the lead. Maybe, I don't know how it's going to turn out, but there's a high chance, I think, that people are going to say, it's been rigged, and maybe there's going to be trouble with if Trump does lose, there's going to be trouble with the handover. He hasn't denied it, has he? That
No.
So it's
really.
So my friend said, look, I think my base scenario is that it's going to be a real mess. He said, I think there's not going to be that Trump is not going to hand over power, and if he does lose, and he said, I think it's going to be a real mess, and he's very bearish the dollar, although he does think that there might be a spike before, which is kind of overdue. But so I actually agree with that. I don't think it's my base case, but I think it's a good chance that it's going to be a very messy result after the elections and weeks after it, right? Because this is going to take weeks for everything to get counted, especially if it's close, and for a president to be actually announced. So let's get ready for the volatility which is coming.
Mario Cuomo, who's the governor of New York, his scenario is exactly what you said. Biden will win. It'll be contested. It'll go to the Supreme Court. And most will think that the court will side with Trump because of the new nominee going in there and the conservatives' advantage on the court. And Cuomo thinks that the court will rule against him because he thinks that their reputation as the Supreme Court will overrule political partisanship that'll be just too obvious and they'll blow their credibility. At least that's what he's hoping.
You do understand, though, that that's an admission that we're talking about a failed state, right? I mean,
unfortunately, yeah.
As an outsider,
it's in the process. Failing.
As an outsider, I see all these conversations having to do with who's going to feel like the position in Supreme Court, etc. And you know, I see no discussions being on the most basic fact, which is if Supreme Court justices are supposed to be doing their work right, political affiliations should have absolutely no meaning, because their job is to interpret the Constitution and nothing else.
Right.
Yeah. And if you think about it, it's the last resort. The courts are the last weapon that people have to be able to stop governments from doing things they shouldn't be doing.
Yeah. So in essence, admitting that political affiliations, like, affect what's happening with the court is like, in essence, it's a complete failure, because supposedly the court is a separate body for exactly that reason.
Yeah, independent, just like the Fed.
Yeah. Good one, Stel.
That's a good one.
In fact, what is worrisome is that in Germany, Adolf Hitler changed the courts before he came to power, and he did it through the legal system that gave him, even though it was, all baked in, a sense of credibility and authority because the courts ruled with him. So anyway, you're right, Steve. It's sad.
Yeah,
it is
sad to lose your country that you grew up in that wasn't like this and evolved into it.
Don't think that the rest of the Western countries don't have similar problems.
Yeah, I think it's global.
It is more or less global. Yes, that is very true.
Yeah.
Anyhow, we can't solve these problems.
Let's set up an office on Mars.
We can these problems, but we can perhaps
make
have
money.
Have a look at what markets are doing and make some money out of it.
Yeah.
So that's our job here. So let's see what we do about it. Now, as always, I'm going to start with the DXY, and guess what? The DXY is working on an evening star formation, and where did it get rejected from? The 94 area. And why is that? Because that was like a confluence of resistances. Most importantly, in my opinion, the ascending channel that defined the rebound higher after we broke through its trendline support. It now acted as resistance.
Yeah.
And as I've said multiple times, as long as we stay below that, why should I be long the dollar? I mean, fundamentally, it's a lunacy being long the dollar, but of course, fundamentally doesn't mean much, because frequently, in order for fundamentals to play out, you need a long period of time. But technically speaking, as long as we stay below 94, there is also absolutely no reason to be bullish the dollar. So that's the situation here, and I'm not going to go over like the mainstream currency pairs, because Blake did, as always, an excellent job covering them. But we can have a look at a few more instruments. I'm going to start with gold, which Blake did cover, but I'm just going to show the bigger formation, because Blake was focusing more on a symmetrical triangle that's like shorter term. This still looks to me very much like a pennant. And yes, we are testing trendline resistance once again. And yes, if we do break out from here, that's going to be a very bullish development potentially. Now, admittedly, the rebound higher so far has been very orderly, and I still see a possibility for one last push lower before higher. So that's still a scenario that can end up playing out.
DSI, Steve, on both gold and silver for
Mhm.
weeks now have been 30, 35, and
Yeah, and look at price.
and price hasn't. So
And
maybe
price
we get a
hasn't done
rally for
basically more or less nothing. Yeah.
right. There aren't, basically sentiment is kind of negative, and the market hasn't really given people a reason yet to not be bullish.
Absolutely. The market, I mean, the price action hasn't given a reason for people not to be bullish. And fundamentally speaking, I don't ever remember a better supporting environment for precious metals ever. I mean, I don't think a few years ago you could envision a better macro environment for precious metals to thrive. Even if you tried to, think of a better case scenario, I think you would definitely fail. I mean, you know, unprecedented monetary printing, exploding debts,
Negative
exploding
real
deficits,
rates.
negative real rates. I mean, what is missing from the mix that isn't positive? Nothing is missing. Everything is there. Everything is there. Losing faith in fiat currencies. I mean, everything is there. So I really can't see, and I said that months ago. I can't see a scenario that long-term precious metals just don't move aggressively higher. I mean, doesn't mean that I'm right, but it means that no matter how much I look around and try to find reasons for the counter argument, because you have a thesis, everybody has a thesis about things.
A narrative.
You always need to have a look at the opposing thesis. You need to present to yourself the opposing thesis and try to disseminate it and see if there is some merit to it. In this case, it scares me, but I see no real argument. You know what I mean? What's the argument? That central banks are going to be raising rates? I mean, they've explicitly said they're not going to do for many years. And if they have to do it earlier, it's going to be out of a huge need to contain, for example, inflation. And we know that if that's the case, precious metals are going to be exploding, even if they're raising rates, because they're going to be behind the curve. So not to mention that if they're actually forced to raise rates, that's going to make the fragile financial system implode. So that's going to be an extra reason, for example, for gold to shine. So personally, I can't see any bearish thesis here. And the chart says the exact same thing. I mean, the chart says that we've had an explosive move higher, and what's happened since? We've seen a very orderly consolidation. And sentiment, as you very well said, is once again rather negative, which is also a positive.
Right.
Yeah. Silver doesn't look that good as gold does, but I do think that silver at the end of the day is going to have even more gains. I mean, when this bull market finishes, I think that silver is going to have done better. I think that silver in this bull market will end up probably being a lot higher than 50 bucks. So I think buying it down at 21, was an opportunity. And if you're lucky enough to buy it even cheaper, I would just buy, and I wouldn't care what happens afterwards. I buy and hold physical silver. That's it. Now,
you're
platinum.
You're a hodl for silver
having to do with precious metals. Absolutely, yes, absolutely. And something, there is a big difference with Bitcoin and Ethereum and all the rest. No matter what happens, you will always have usage for your gold and silver. Always. There is no chance that at some point people are going to be opening the trash can and throwing their gold away because it's going to have no use. Bottom line, in simple financial terms, gold and silver have had intrinsic value for 5,000 years, and there is absolutely no way that that's going to disappear or go away. Now, I don't know what's going to happen in 1,000 years if we're going to be all over the universe and mining gold and silver from asteroids or I don't know
Yeah.
what else.
Kryptonite.
Yeah, but in my lifespan, I'm not worried about it at all.
Well, you know what? You should stick around for the interview. Patrick Kareem is with us today, and I went to his website, and they're talking about a super cycle in silver. So you guys have to stick around for this interview today.
Yeah,
I looked
that
at some
sounds
of the,
actually interesting. I wish I
and
could
then
stick
I
around. I'll
talked
try
to
to watch it
David
later.
Brady. I talked to David Brady last week, and David really likes. He thinks there could be, like you said, a little more weakness, but he likes SILJ, which is an ETF on the junior silver miners. Thinks it will outperform everything.
It is very, very likely that he's right. And keep in mind, first of all, I have a really good relationship with David. He's a great guy, and needless to say, he's been right on everything so far.
Yeah,
right?
yeah.
He even predicted like the huge V-shaped rebound in stock indices in advance, and gave the exact reasons why they're going to happen. Not, of course, of a V-shaped recovery in the economy, but a V-shaped recovery in monetary policy.
You know what I heard? One other thing from David that I think is very interesting that I didn't think of, and this new move in the U.S. and everywhere, you guys talked about it towards a green economy. He said, in order for that to happen, he thinks that there'll be triple-digit crude prices to generate the urgency to go green. So he's saying not here, but foresees triple-digit oil price.
Not at $40 crude. Yeah.
No, like triple-digit. He thinks, and that will inspire people. Like right now, it's kind of a break even between going green and using carbon-based fuels. But if we had a super spike in oil, that would, make it, an easy decision because it's a lot cheaper.
The fun part is that people think it's unthinkable for crude to go back to triple digits. What they don't take into account is the loss of value in the dollar and fiat currencies in general. As we've said before, I expect everything to appreciate against fiat currencies. Everything with intrinsic value.
Yeah.
So yeah, I mean, absolutely. I think it's extremely likely. And people are negative the economy for very good reasons, but they think that being negative the economy necessarily means that commodity prices are going lower. Yes, that would be the case if we assumed that everything is denominated in a stable currency, right?
Yeah.
So against gold, for example, if we're talking about the rest of commodity prices against gold, which is the traditional measure of money, yeah, might be the case. But against the dollar, against the yen, against the euro, I don't think so. There was a question about natural gas. Natural gas consolidating, I think it's just coiling to make another attempt to attack the 290 area. And as I've said before, I think it's very likely that next time is going to be the charm and it's going to succeed breaking through it. And if that happens, then I think we're not looking back again. So keep that in mind. Above 290, I think that is your cat hungry? No, actually. Both of my cats are rescue cats, and one of them is missing half a leg. So she made a desperate attempt. She made a desperate attempt of jumping on the desk, but she didn't make it. So when she fell back, so that was the scream.
Poor kitty.
Yeah, poor. I mean, if only all cats were as lucky. She doesn't really need 4 legs to be in the house and be fed and be petted all day long. You know what I mean?
All right. If you're a Vulgi cat, you've got the life of Riley.
Yeah. So more questions that I have to cover. Euro Aussie and Euro Kiwi. I would talk about Euro Aussie anyhow, and I'll tell you why. Because of this. Euro Aussie is making another attempt You know,
Yeah.
you can redraw this line a little bit as a completely horizontal line like this. So
Yeah.
Euros is making another attempt to break through this key resistance. It's roughly at 165.80. Okay. It's definitely going to be a bullish development because we haven't managed to be above that area since 1st of June. So we've been in a consolidation for June, July, August, September, and half of
It's a long
October.
time. Yeah.
Yeah, so 4.5 months. This has been a resistance. So I'm pretty sure there is there are plenty of stops and limit orders above that. Okay.
And your target above it is what it's not even 38%.
I
It's
think
just
it's above
23.
170. I
Yeah.
think it's
And
above
it's a
170.
very shallow retracement from where the spike was. It's like only, so it's conservative. You're looking for a 23% retrace of the decline.
Yeah, actually, I'm more focused on this horizontal support resistance area at 170.50, which is a little bit above the 23.6.
Yeah.
But yeah, still, I mean, we're talking about like, what is it? 500 pips roughly
Yeah.
of upside. Not bad.
Nice trade. Yeah.
Yeah, not bad. And here's Hero Kiwi. Hero Kiwi, looks a lot more mixed, I have to admit. And Euro Kiwi is, in essence, tapering off a little bit my enthusiasm about Euro Aussie. I would want to see a Euro Kiwi that looked, somewhat more bullish to be more enthusiastic about Euro Aussie. But that doesn't take away the fact that, as I've said, this is a key resistance area in the Euro Aussie. And I'm pretty sure there are going to be implications if we break through it. And, we're attempting to do so now. So keep that in mind. Buy Bitcoin, 1 million in 5 years, says Joe.
Do you think
Yeah.
that Raul has lost some of his credibility with, what he's saying about Bitcoin and stuff? Because he used to really have a pretty solid rep as a market guy, even though he's really just a publisher.
Listen,
Really.
I've listened to this guy speak a lot of times and a lot of the recordings, etc.
Yeah, I've interviewed
He's
him.
good. He's serious. And I have to say that for me, this thesis on Bitcoin is an outlier because everything else he says, I more or less agree with. I disagree with him on some things, but I do see the logic behind them. So, for example, he doesn't so much believe that inflation is a potential threat with what's happening, but there is a lot of debate about this. So it's not at all like a fringe position. I mean, it's a split position there. But having to do with, I don't know. I mean, something, I've seen crazy things happen in these markets, and perhaps Peter Schiff is right on this part, having to do with Bitcoin, that it's part of the same bubble. I mean, can Bitcoin actually end up going to 1 million? Logic says it shouldn't. It makes no sense. But I've seen so many things make zero sense during the past, like roughly 12 years, that, you start watering down your expectations of how things can actually follow logic or not. But
I was
still
very surprised by when I was trading the tulip mania.
in the late 17th century.
I was
right?
surprised it had that much momentum. But yeah,
if I remember right, I think the tulip mania peaked at 1669.
Yeah,
if I remember the year right.
yeah.
Yeah.
What a valuable flower.
Which proves.
I wouldn't give that. And then, I'm such a romantic. I gave it to, this maiden that I was dating at the time when I was a knight back then. And man, it was like
a Dutch
all right,
knight.
Stop me.
There you go.
Yeah.
Pinkert, the Dutch knight. Yeah.
Anyway, we have an interview. If you want to wrap it, Patrick's in the house.
Absolutely.
Now that I wasted your time with
let's pass
nonsense.
the baton to
Patrick.
To Patrick, yes.
All right. Okay, Patrick. Thank you for hanging out here, waiting to hear from you. I guess Steve is okay. I'll do it. More. I'm going to make you a panelist. Okay. Welcome to Phase, Patrick.
Hello. Can you
Hi,
hear me?
Patrick. Yeah, I can hear you loud and clear. Welcome. Nice to meet you.
Thank you. Same here, sir.
It's great to meet you. I appreciate you taking time to be with us today. And
Will you be sharing your screen, Patrick?
Yeah. There's a green button for a screen share, Patrick.
All right. Let me know when that shows up.
It shows up.
Yeah,
Cool.
we can see it.
Okay.
Perfect. Enjoy.
Wow. Okay. So I went there to your website. I have to ask you first
Silver
about
$360.
Yeah. I didn't hear any people falling off their chair right now.
I went wow.
I know one thing for sure. I'm gonna retire for life if that happens. Stelios the same. So
yeah. And by
that's gonna be great.
28. Final 2030 or so. Well, yeah, not that long to wait for that. Let me ask you this: your handle. Why bad charts? Is it like that movie with Richard Pryor and Gene Wilder where they walk into a prison, they get arrested, and they go, we bad, that your charts are not bad, they're bad.
Well, it's weird. I haven't been asked that question too often, but it was kind of my mindset I had in back, it's like, state something that I should try to disprove and show that actually the charts are good. And it's just like, there's just like bad charts. And I mentioned to one of my friends back in the days when I said, I'm going to start like maybe branding a little bit my, what I'm trying to do. And when I said that bad charts, says, yeah, Pat, I think you got something good there. And
it's an attention grabber. Very creative. So before you did that, I'm interested, Patrick, in a little bit about your journey on how you got from point A to bad charts. What were you doing before you got into the trading business? And tell us about what it was like for you, maybe your first entry and position and experience in trading.
Yeah. I hope my memory recalls this correctly, but I remember like in the mid 90s there, I had like a couple $1,000 where my mother's boyfriend, he says, look, Patrick, let's put that money somewhere and he brought me to this, they bought a mutual funds but in technology, but I was maybe 14, 15, 16. I knew nothing about technical analysis back then. And then it just 2000, I said, okay, I'm going to buy a house. And then I needed like a cash down, and that 2000, I sold probably close to the top of the .com bubble without realizing it, just because I needed money for a down payment for a house. And then when I saw the returns, I think I had 10-folded that 2000. It was a nice cash down for my first house. And then I started getting the bug. I said, oh, this is kind of cool, I didn't do much trading.
1,000% returns are pretty cool. Yeah.
Yeah, well, doing that nothing. Sometimes I think, what am I doing all these charts for? Maybe I should just be stupid, just buy the index and go to sleep, But I know what I know now after rabbit hole after rabbit hole. I don't want to give my money out to a fund manager and him deal with it, and they don't know how to sell. They never tell you when to sell. Perfect example, 2008 there. I had nobody in my family that their bankster or the fund manager told them to sell. It's all hang in there.
Yeah.
But to get back, sorry, I got off on a tangent. And then after that, in 2006, penny stocks, I started having regular income. I'm a Linux Unix engineer by trade. I still do it today. I'm a consultant in system engineering. I still do it today actively.
Okay.
And but I started to have inflows of money, and I said I got to do something with it. But open an E-Trade account. But then I was on all these penny stock forums, and I think a lot of newbies, they don't know anything about Forex. They don't know anything about technical analysis. They go on a stock forum, and this guy's pumping, dumping these stocks. It's a miracle I haven't been wiped out multiple times already. Every time I slept at night and I couldn't. I was something's wrong. My instinct. The next morning I sold. And thank God I followed my instincts back in those days. And then the big game changer was when I read the book, Stan Weinstein's Secrets for Profiting in Bull and Bear Markets. I don't know if you guys
Okay.
read
I
this book.
remember him. Yep.
Wow.
My generation. Yeah.
Yeah. Like notions of, it doesn't matter the fundamentals, read the price action. There was the concepts of money management there. And from there on, it was like, I shorted I was still ignorant. I shorted the 2008 crash without doing too much macro. I didn't understand what was happening. And I was lucky back then, the Fed or the interventions, they weren't as strong. They picked up maybe in 2009. I got a good ride there. And after that, I switched to, I just always have a curiosity. I need to try new things. And I moved away from equities into Forex. So for many years, I did just Forex. And what else? After that, I spinned off into futures, commodities. And here I am today there in the precious bull market, which is a couple of years back when I saw that gold, everybody's looking at gold and US dollars. And the chart wasn't too good, like in 2016, 17, even 18, it started like you were seeing a bottom. But when you went to look at gold and other currencies like Australian dollar, Canadian dollar, wow, these things were breaking out on monthly charts, quarterly charts, all-time highs. I said, look, something's up. And I started sniffing around. And then I met these guys like North Star, another Twitter handle where he was experimenting the same things with different currencies. And I said, look, I think finally I'm kind of seeing the future. Not like, it was kind of my crystal ball. Look, fiat currencies, they're all debasing. If you study a little bit or follow Mike Maloney's history of money there or currencies, eventually, if they're not backed by anything, their intrinsic value is zero. It's a cliche, but that's what's happening. Even I don't know if you guys know the website Priced in Gold.
I don't.
There's a website Priced in Gold, and he has all the charts of everything but priced in gold. So a Big Mac, how much does it cost you in micrograms of gold and all that? And he has a great chart. It's a half decay of the US dollar and the half-life of the US dollar. And since 2000, 2004, it's been almost on a perfect track to zero. So the half-life, every 4 years, it loses half of its value. It kind of stalled when gold stalled. From 2012 to 2018, 19, it kind of went sideways. But right now, I think with this next leg up in the precious bull market, it's kind of, we're going to kind of see the US dollar there go to, yikes, zero. It's hard to believe that, but it's we see it every day. Right?
I mean, I thought that looking at the Dixie maybe going under 50 was kind of a, catastrophic call, losing half its value from here. Do you look at, when I'm in the market, Patrick, I look at what the other side is saying and what their reasoning is, rationale for their narrative. Have you taken a look at what dollar bulls are saying as far as things like dollar shortages because of a lot of debt being denominated in dollars, especially from emerging markets, that there could be, one more big spike up in the dollar before we have a big bear market? Do you look at what their argument says and have you considered it? And I'm wondering if there's any area technically in the market, like the dollar, say it got back above 97, that your scenario could be correct, but just put on hold for a while.
Well, I try to, I always hear narratives for people to try to justify their, why the price movement would happen. But I remember, I think it's Peter Brandt, he said one time, by the time you realize the narrative, the true narrative of those long-term macro flows, why something moves in a certain direction, it's too late. I forget there's a term for that, theory. So yeah. Okay. I listen to the theories, the milkshake and all that stuff, but at the end of the day, I look at the chart because somebody has that theory, somebody else has the inverse theory, but at the end of the day, it's all those concatenated theories put together and the money behind that, all that buying and selling, we'll see the truth in the chart. Like,
Yeah.
I like a nice story tabletop, like a coffee table discussion with the family and arguing and all that. But this, what we see here, this is my best tool at the end of the day, is the price action. But what I've noticed, like recently, for to justify, like, let's say US dollar spike, a US dollar spike, a VIX spike, a gold to silver ratio spike, all those spikes, they happen in the liquidity crunches. Well, at least they happened in 2008, they happened in 2018,
Good point.
and 2020. So that the only worry I have, yes, we might have a spike. I don't know. Do you guys see my mouse when I move it?
Yeah.
Okay. So let's say we do have a spike, but the US dollar could be here. Like my target's around 80, 85 right now for this next bear leg. Even if it spikes, it could spike like from down here up to here, and it'll just be a lower high in a downtrend. Like this is a monthly candle trend in a downtrend. So I'm not kind of too worried about it. It could just be, I like going on the higher time frames, and that could just be a wick that's going to last maybe 2, 3, 4 weeks until they start printing more money or whatever, like it's going to drive it down. So if doom and gloom, it's never going to help you make money. There's a Gold Ventures, another Twitter handle, and he's so right. Like emotion management, if you're always fearing of that next crash, of that next black swan, you're paralyzed. Yeah. So what's the use, Like, I love Peter Schiff and all that. I listen to his podcast, but it's not tradable advice. You can't action on that. What I could action on is me looking through different technical analysis, through different tools, always trying to use different indicators, mix and match, look at the landscape and see when everything like's in sync, then I know I have increased probabilities of my possible move happening. It's not 100%, but that's actual market participants there, like what we see in the price action. All the rest, it gets views, clicks, but it's tough actioning on that.
Okay.
Like, yeah, this is like the gold chart with the US, the relationship with the US dollar and the Swiss franc. You could see like we're really just starting a cycle right here. 2016, 18 started going up, and they're both breaking out on the monthly chart. So you got even currencies now backing up the move, and that we're in a precious metals bull market, a commodities bull market, gold sniffing out all this long-term balances, whatever, like negative yields, all that. It's all aligning, all coming together. And we're not early. Well, we're at the beginning innings, but the real early is the guys that were here in 2016. That was like really the time to get in. But right now, it's really gaining momentum, gaining steam, and you can't really change these trends.
Right. So you have a 16 and a quarter year cycle. That's going to take us where out to 2033
for the
from
USD,
this last low we had.
Yeah, for the USD, Swiss franc, it brings me out there.
Gold. Yeah.
So it depends where it peaks. Sometimes it peaks right translated of a cycle. Sometimes it peaks, it could peak in the middle, but it's never like 100%. People look at, sometimes on Twitter, I'm all over the place, targets 300, 250, but you kind of got to take all these targets and time to reach those targets. I would like put them in a scatter chart, and then you could see where most of them land. And that's probably the most probable outcome to happen, because somebody's like gold 2000 or silver 300. Nobody knows for sure, but you could keep looking through different different angles and try to accumulate evidence. And then when they all start pointing towards the same direction, and then you have increased chances.
Yeah, it's like an attorney, confluence is evidence.
Oh, I like that. Could I quote that? I'll still.
Yeah.
It's like I always try different views, and here's like I call this a super arc. So this is an arc from for silver that's 30 years, 60 years almost in the making. And on this at the bottom here, yeah, I'm a little dyslexic, so I wrote gold VS, but that's like actually gold versus SPX ratio.
Yeah.
So yeah, there's a lot of things going on in this chart. But when my first target right now for silver would probably be $60. I don't know exactly when, late 2021, maybe earlier, but around that area, we should be hitting that important resistance line around the $60. And after that big pullback, and that big pullback could be your black swan event there, where that US dollar spike, it could happen maybe in 2023. So, like you could fit any story. I love telling a story, and charts, you could fit any type of narratives to try to justify why it would pull back down here. But eventually, that's what I'm looking at, a retest of that breakout line here. And then after that, parabolic mode, everybody is a millionaire. I don't know who on the line said that, so we could all retire in 2027 there, before 2028, before the bull cycle ends.
Okay. All right. I like your work. It's very interesting. Your formations and your methods, yeah, look at that. So here you have, is this a monthly?
This is a yearly chart.
Yearly. Okay.
And what's insane
Each candle
about this
is a year?
Yeah. Reduce
Okay.
noise. I love reducing noise.
Yeah.
And
Okay.
Is a log chart. So usually log charts, you can't sustain like a high degree incline, right? Because if you go on the linear, you probably see a bubble happening or parabolic advance. But look at gold. This is gold. And then it's like above my target's like 6,500 in 2027, like another evidence that measured move pinpoints exactly towards the end of those other cycles from those other charts, that other evidence. And it's on track. It's right below that line. So I expect it even to overshoot here in the next year and zigzag all the way up here. And if you really want to fall off your chair, look, this is gold that did that exact measured move, but in the Turkish lira. So that's a currency that's going down the drain. And guys, like we're probably like we're just beginning this right up. It's like, Jesus, if you don't own gold or something, some hard assets, unless something drastically changes there, this is where all fiat currencies are going essentially. Kind of mind-boggling when you see that.
Okay. So, okay. The implications of some of your work, besides being able to make a lot of money on these moves, and I'm assuming you also like some of the miners, and maybe SILJ is an ETF of silver junior miners. I'm not sure if
yeah, exactly.
Yeah, you follow that.
Yeah,
So you make a lot of money. Gold's 6,000 and silver's 350. Where are you going to live during this time frame? Because I would say that there most likely would be, kind of a breakdown on many levels of society with, and we have historical examples, like as recently, I mean, you could go to South America and see how people have navigated currency collapses before. Do you live here in the States?
I live in Quebec, Canada.
Oh, okay. You're in Canada. All right. So, you in a populated area?
No, North Shore of Montreal. So I'm in a small city, suburbs where there's maybe 20, 30,000 inhabitants.
Okay. So are you a preppy? I mean, if you're looking for these kind of things to prepper,
no.
not a preppy. A preppy is a prepper, that's getting ready for a world that, isn't going to be the one we're used to living in. What are you doing to prepare you and your family for, besides making money, being long physical assets? Are there any other preparations people should make besides being long precious metals in the world that you're projecting?
Well, I'm not there yet. I know there's some right now. Like I'm not really there yet in the preparations for stocking up on cans of food and all that.
Okay.
It's kind of in the back of my mind, but like it's not.
I mean, what do you think food's going to cost when silver is 350?
Well, everything's gonna double, triple. It's gonna follow because like even a pint of milk. Like my girlfriend, when she goes shopping, let's say it's like we have two children. I said, hey, honey, how much is it for a week? She's like $300 Canadian. I said, what? And in my head, I had my mom coming back in the 80s or 90s, costing $100 for a family of 4, and now it's like 300. but it's
Yeah.
gradual, Dale. Everything's gradual. It's the threshold of noticeability is so low that it sneaks up on you. Like my salary hasn't tripled in those years, you know? So it's my purchasing power that's going down and down. And the only way I could like have the goods that I think I'm entitled to, I have to go get a loan at the bank, you know, big mortgage, big everything. And it's,
well, I mean, you're up there in Canada and, you know, I trade the loonie. What do you think is the future for the Canadian dollar? Zero like the US dollar?
Well, okay, if you measure them against gold, they're all going to zero. But if you measure them one against the other, the loonie is going to drastically outperform the US dollar from here on out. So if there's a VIX spike, the loonie is going to get crashed. But it's going to follow like the gold chart. So the loonie is going back to, I think I had something like maybe $1.60 US. It's really going back up high.
Okay. All right. Yeah, I've heard those targets bandied about. 160. So you're probably constructive of some of the other commodity currencies like
all
Aussie.
Of them. I have charts on pretty much all long-term currencies. I have to gather evidence. So here's my chart. We just starting a bull cycle. This is a monthly chart, and we should be going a lot higher for the Canadian dollar versus the greenback. The Australian dollar, same thing, same type of breakout for the USD versus Australian dollar. There's huge Australian dollar versus US dollar just breaking out of these important decade-long cycles. This is an exhaustion low. You can't get clearer than that. You think it here? I remember in March, I couldn't even buy silver in March. I was scared. I thought it was the end of the world.
I know what you couldn't buy physical.
Yeah, you're like, well, I know what I mean is I couldn't pull the trigger. I thought like
everything I see.
Zero. I thought like silver's going down to $5. I thought like gold's going imploding. It's like human emotions right here. Unless like you're a veteran of trading and you know what you're doing, you say, no, Pat, this is actually great.
When the blood's on the streets, yeah.
Here too, 2008, blood on the streets. That's probably the best time to go long Australian dollar versus US dollar.
Okay. Some real nice work. So what's your business model? Are you guys mentors? You have a subscription service for your charts? Maybe this is a good time to show your website, unless you had some other markets you wanted to cover. So I know I'd be interested in following you, and I, really think that your presentation was excellent. So go ahead. Oh, you want to show copper?
Copper, copper is another one. It's all about
the dollar.
Every time you have to look at always gather evidence, see if everything fits. If something starts not fitting, then you have to take that into account. Here's another fun I had with smart money versus dumb money. It's a reference to, I don't know, you guys do some positive volume analysis. Positive volume index is every time the price action goes up on the increasing volume day, it's in this index. Every time every time the volume goes down, then the price action movement is in the negative volume index. So it's said that smart money buys on declining volume days, on declining volatility, and the crowd money gets in on breakouts on increasing volume days. And when you have both together, that means your price action is increasing on decreasing and increasing volume days. You get strong moves. And here's copper, and look at that, smart money and crowd money getting in together. Even copper here, like I thought copper would never get back here. I thought it bombed way before, but look, that's what's happening. I have a measured move to about above $4 there for copper.
Okay. A view on the S&Ps with this debasement move. Are they going to, blow off with weakening dollar? For a while that should be helpful, but don't you think we'll reach a point where financial assets are under pressure because no one trusts fiat anymore?
It's nominally, I think U.S. equities are going to stagnate. So they're probably going to have maybe like a blow off top soon, but they're either going to crash, correct. But I kind of see like I'm starting to like research that it could be like the 1960s, 50s, where the U.S. market just went sideways. It went down,
Yeah,
went up, but it
you're
never did
right.
anything.
20
And
years, I think.
yeah, it did nothing. So, and what I'm trying to find is my gold to silver, gold to Dow Jones chart or silver to Dow Jones chart. And what you'll see is
There it
gold or
is.
silver is going to outperform the Dow or the SPX or the Nasdaq for the next 10 years. So whatever
Okay.
what you do is you if you're going to go long something, just go long precious metals or commodities because they will outperform whatever nominal. So even if the Nasdaq goes to 100,000 and the Dow to a million, well, gold is going to percentage wise is going to have a higher value than that.
Do you follow grains? You can't eat gold and silver.
Yeah, I do. I follow all the grains. Sugar. Well, sugar is like my inflation sensitive asset. So this one
Yeah.
has a strong relationship to gold.
Right.
So if sugar pops up, you know that you're really like really sifts out inflation, and silver is sugar is really popping up on the multiple of type of analysis that I do. Sugar is gonna explode, and when it's gonna explode, it really goes like parabolic there. Even in the 70s, there you see how it pops up, and right now gold's like leading the way. It's like the pioneer, the first guy to go in the forest and hey guys, if something's up, and then silver follows, the miners follow, sugar. Then after that, hey, I want in on this inflation stuff, and sugar definitely is a big one. And even recently, I did wheat.
Yeah.
Wheat's quarterly chart. Even look on the quarterly chart. This thing, the chalk and money flow.
Yeah.
It's moving up, and here's like the volume. I call this volume defined support or resistance, and we're above it. So this is the price action, the volume for this price action range, and we're sliding up. It's a vacuum up here, so nothing's stopping this from going up to 860 there or high, at least higher up. You know, it's not going to go in a straight line, but even the cost of wheat is sniffing out.
Yeah. All the
got,
grains. Yeah.
Well, I don't know whose screen I saw before we started this, but in TradingView on the right there, most of those stickers that you guys are following is the same list of stuff I'm following.
Okay.
Even look at soybeans. Soybeans, another one, a bull, flag, pull, flag, crazy target up here.
It's not crazy.
It's not, yeah, you're right. I should take that word out. It's a measured move. It's a probability, but everything's aligning for that until the price reverts and shows me something else. Look at this huge base right here. It's like we're sliding above it. So this is the next target here, 1400. Maybe a crash or some severe correction here, and then after that, up and away.
Okay. What was your the year and the target you have in the silver super cycle one more time?
Okay, so
your first chart
okay,
had
this one here.
Yeah.
Oh, sorry.
There it is, 365.
Yeah. So
by 2028.
Yeah. So yes, precious metals, they usually like go parabolic and then they crash to their cycle lows really fast. So I'm expecting this to be closer towards the end of that cycle that is going to end later this decade. So yeah, it's going to melt up 2028.
Okay. All right.
It's gonna go when everybody you know is going to want to get in silver, Dale. That's when you sell.
Yeah, I've seen it a few times. I'm a little older than you. But I remember the bunker hunt squeeze, so that's how far back I go. So Patrick, after an interview with me, you know what you become, even though you're already a great technical trader. You know what you are now?
No.
My trading warrior brother.
Oh, I like it. Yes.
Huh?
Yeah, I'm in.
My trading warrior brother at Bad Charts 1. So, you can follow Patrick at Bad Chart 1, charts plural, on Twitter. And you want to give your website address out too?
Sure. It's just badcharts.com. There's
Okay.
nothing. everything that I do is on Twitter, but on bad charts, I have a YouTube channel where I do in-depth 10, 20, 30 minutes. When I think that like some of the charts I do merit a narrative, like some deep, more explanation, then you could go in here, like I reviewed Don Duret's top gold, silver stocks for 40 minutes. You could listen to that and see my process. And you could go have fun there. This is like a good place to.
Okay. Yeah, you have some nice stuff there. Do you have quickly a view on Bitcoin?
Yeah, Bitcoin up and away. It's like I know like gold bugs, they get mad at me, you know, like you're not supposed to like Bitcoin, but since I look at the charts, what I see a chart, they're very analogous fractal movements. So Ethereum is the same as silver and Bitcoin is the same as gold, but on a condensed time frame. So if you look at the fractal of what Ethereum's doing, it's doing the same thing that silver is doing, but faster. And I want to see these two go up. I want Ethereum is going to outperform Bitcoin, just like silver is going to outperform Bitcoin. I don't know if I could show you. I don't know how much time, but that chart. BTC. I'm just going to show you this chart, which is pretty insane. Okay, yeah, this chart. See, this is Bitcoin and gold. Like the time frames, I had to condense them, but look at this fractal. It's just insane. It's like they're behaving the same. And here's Ethereum and silver, same type of parabolic behavior. You know, like they really go gung ho. And look at that. It's like the same thing.
Wow.
So I'm pretty sure that I want to see, not because I believe necessarily in Bitcoins and cryptos, but I believe in technical analysis, and I want to see these fractals playing out. It reaffirms.
I've never seen anyone draw this analog before, so I'm so glad I reached out to you, Patrick, and I want to thank you so much for coming in. And I learned from you today. I'm sure anyone that was here as an attendee and watches this video later are going to glean lots of pearls from you. So really nice meeting you, and would love to have you back down the road.
Awesome. I really appreciate, Dale, your time. Very appreciated.
All right. And, you know, being my trading warrior brother, you have to, you know, I have to have access to you 24/7. Patrick, what's this doing? Patrick, what's that doing? What do you think? What should we do? What would I have? I'm just kidding.
Oh, it's be my pleasure. That's how I get better.
Yeah, I'm kidding you, buddy. Okay. Anyway, thanks so much, man. You know, I hope that pips continue to rain down on you and the people who work with you, and that you remain untouched by this virus, and have a great fall and winter trading season. I look forward to doing this with you again down the road.
Excellent. Thanks, guys.
All right, everyone. That's Patrick Kareem at Bad Charts 1 on Twitter. Talk to you later. And remember, guys, don't just count your silver coins, your junk silver, your bullion, your crypto. Count your blessings. And I'll see everyone tomorrow. Adios for Turnaround Tuesday. Thanks again, buddy.
Yeah, bye, man.